can start.
Hi, everybody. Welcome to our video today. We are going to talk a little bit about real estate and mortgages. My name is Elise Baumeister. I'm with Red and White Realty in the Waterloo region. I have my YouTube channel, which is listed with Elise, and I am sitting here with Lewis. Do you want to introduce yourself, Lewis?
Hey guys, Lewis here, Empire Mortgage Group. Yeah, this is what our second video now, Elise.
Yep.
Yeah, first one was fun, so I was looking forward to do more videos with you.
Yeah, I just find them so informative, and we talk about topics that come up with clients every single day. When I meet with a new client, they hit me with the same questions, and I don't always have all the perfect answers. So I reach out to people like Lewis, or I have a paper that I just give them with some names of the mortgage agents that I deal with, and I say, here you go talk to these people. They're going to give you the right information. So today, I want to talk to Lewis a little bit about interest rates on mortgages. I want to know about, what will happen. A lot of people are buying right now. A lot of people are selling right now, trying to make money on this hot market. But once you buy a house and, or you sell your house and you have this mortgage for, let's say, $600,000 at a certain interest rate, what happens if it goes up and our interest rate's going to go up? So can you give us a little bit of maybe a prediction or what you've heard happening or what you've heard about what might happen, Lewis?
Yeah, so that's actually one of the hottest topics that I'm getting a lot from existing clients and clients that I'm getting that are new. That's on everyone's mind right now because interest rates are at the lowest we've seen for forever, right? And everyone's saying, well, this is too good to be true. It can't last forever. And, it probably won't last forever. But the question on everyone's mind now is, so when do rates start going up and how high are they going to go up? And that's a big conversation I have, and where I think everyone should have a conversation, especially if you're looking to get into a variable mortgage, right? Because for anyone that doesn't know, there's obviously two types of rates you can get. You can get a fixed rate, which essentially locks you in at a predetermined rate for the whole duration of the term. And there's variable rates where you start off at a certain interest rate, but you're subjected to influenced by Bank of Canada. So if they decide that they want to increase their interest rates, your interest rate could also follow suit, right? So that's where a lot of people now at least are actually gravitating to variable rates, just because the difference between fixed and variable is just so big. Like that gap is amazing. Like some of the gaps are like almost a percentage, a full percent. So we're talking fixed rates in the low twos, but we're talking variables in the low ones.
Wow. Okay.
So a lot of people are taking advantage of that and saying, you know what, I'll take the risk for 1% difference in interest rate. I'll take the risk and get a head start on paying off more of my principal.
Yeah. Which sounds great.
Sounds great.
People are scared.
Yeah, especially people have never gone into a variable, right? Most people, to be honest, I think majority of people would be more comfortable in a fixed, but when they see that interest rate on a variable, they get very they're enticed to want to try to get into it, but they're always skeptical as to what are the downsides to it, right? So the great thing about variable rates, Elise, is most banks, I think all banks actually have a clause in their contracts that if you are in a variable rate, you can always lock in your rate at any point during the term.
Okay.
So if you decide that, after 2 years, Lewis, you know what, I get this call a lot sometimes, like, Lewis, I'm just scared that interest rates are going to climb so much higher. What do I do, right? You can call the bank or the lender that you're with, and most likely they will be able to lock you into a fixed term for the duration of the remaining period of time that you have left on the mortgage. So that gives you a little bit of an exit if you feel that you're not comfortable with it anymore. So that's a little bit of a incentive for people to try variable, because you always have that way to lock in too.
That's great. Yeah. Cause, it's now, well, people like, it's scary, obviously, because this is your house and this is your main investment usually in life. This is what, when you retire, this is what you put all your money into. Will people have kind of a heads up, or will there be kind of, a warning signal if mortgage rates are going to climb?
There will be a warning signal. So Bank of Canada will usually announce it a day or two before it actually do it. So 1 or 2 days is not a lot of time to react. A lot of lenders are becoming very consumer oriented now, and a lot of my lenders will actually notify clients as well. So in case they don't, you don't watch the news or watch CP24, they'll say, hey, look, just letting you know that Bank of Canada has announced that they will increase interest rates as of 12 a.m. tonight. And what banks will do is they will give you sort of a grace period. So a lot of lenders, what they're starting to do is they're giving you 2 weeks. So even though rates are increasing tonight, you'll have 2 weeks after tomorrow to lock in your rate if you decide that you want to go ahead and lock it in. So they'll do that option. So that's something new that a lot of lenders are trying to do, and I think that alleviates a lot of that anxiety that clients are like, oh, I only have like, well, in this case, like 10 hours or 12 hours to make a decision.
Yeah.
Right. So yeah.
That's awesome though. That like gives even like me peace of mind, or, that's information that I can bring to my buyers and say, I know that there's a lot of talk about how interest rates are so low, and a lot of people say like it's not if they'll go up, it's when they'll go up.
Yeah.
But it's nice that people have options, and that's why I always recommend for people to talk to mortgage agents, because a lot of people just listen to the news and take that information and then decide for themselves that, what, just because I can afford a house right now at this amount of money, when the interest rates go up, I'm not going to be able to. So that's great information to have.
Yeah.
Is there anything else that you can think to add to this, Louis? Anything that you think would be helpful for people?
Well, I mean, I haven't really gotten to the whole rate topic, right? I just kind of veered off a little bit there with terminology, but people would ask me, Louis, like what's going to happen? So Bank of Canada has already confirmed that interest rates, well, they'll do their best to hold interest rates until at least, originally it was 2023. That was the original statement that they made earlier in the year. They've since then made a little bit of speculation that they might do it a little bit sooner. So now they're saying earliest that they'll probably do it maybe could be middle of or end of Q2 next year. So we're talking summer of next year. So that still gives clients, a little bit of reassurance that hopefully within the next, well, we're actually past midway already. Time flies so fast, but we're already past midway through the year. So safe to say, 10, 11 months, we shouldn't see any changes in the interest rates. Now, that could change at any point because interest rates are a direct reflection of inflation, right? So inflation is that big indicator that a lot of the economists, chief economists for banks and the Bank of Canada itself watches on a monthly basis is inflation. So when inflation starts to creep higher than, I think the standard right now, I think it's 4% is sort of where they want to try to cap inflation at. Once inflation starts to creep up and over that number, it's sort of like a signal to a call to action that, interest rates could be increasing to help curb that inflation. So there was a little bit of speculation earlier on, like a couple months ago, I had a couple of clients ask me because they've been watching the news so much, because as the economy was reopening the last couple of months, everyone decided to start spending money.
Yeah.
Right? And when you spend money on products and services, naturally inflation will go up, right? Because people are spending money. And so a lot of people were ringing the alarm bell saying, okay, well, we're going to start seeing inflation rates go higher than what we want. Is that an indication that Bank of Canada is going to, forego on what they promised and increase interest rates sooner than they want to curb that inflation? But, what I think is, and I think Bank of Canada also released a statement to reassure clients that they won't be doing that, is this spending that we're seeing in the market right now is not normal. Basically what it is, it's a culmination of the last almost 2 years now where people aren't able to spend money because of COVID. Whether that be because, places are actually naturally closed, or people are just scared to spend money because they don't know what the future entails or how long it's going to last. Right? So people are just holding on to money, building up these walls of financial savings just for in case this goes for longer than what we want. Right. So all of a sudden now, everyone's now getting double vaccinated and the economy is reopening the last several months to almost full, what it was before the pandemic. So everyone's now spending money. You remember those first days of when retail opened, you've seen all the lineups at the stores, right?
Yeah.
So, right. So I think that was June, right? The first week of June, I think.
Yeah.
And
people were excited. I mean, things were opening up. You can go and it just some sense of normalcy in this world, right? So it almost makes you feel like a normal human being to be able to go into a store and talk to another human and buy something. So yeah.
Yeah. So I think that's, it's safe to say that that's not sustainable spending. So
Yeah.
everyone's just trying to, it's just a backlog of people that wanted to, buy stuff, and a lot of I have a client who's a travel agent, and they're starting to see an uptick of interest as well too. People flights and everything, just because people want to go on vacation too, right? So I think it's not sustainable. So Bank of Canada reiterated that it's just because of this. It's because of this backlog of not being able to spend. So safe to say, I'm very confident that Bank of Canada will uphold what they said, and at least until middle of next year we should be okay. Now comes the follow-up question that a lot of my clients ask is, okay, so now we know roughly when interest rates are going to start to decline.
Mm-hmm.
How fast are they going to start to decline?
Yeah.
Right. So Bank of Canada technically they come together every, I think it's month and a half. So 8 times a year,
mm-hmm.
They come in and they discuss what they're going to do with, the interest rates. Right. If they decide that they will, and I'm just basing this off of past interest rate changes, you're not going to see, like, I want to reassure clients that you're not going to see like a 1% hike overnight. It's not that the rates are going to go from 1.5 to 2.5 the next day. Like that would shock the economy and put us back into another situation where we don't want to be in. But if Bank of Canada was to increase interest rates, they usually do it 0.25% of the time, so 0.25%.
That's good.
It's just little increases here and there. I think I've seen one case, as I've been working through the banks, where they increased it, I think 0.5%, but that was a very rare situation. But 0.25% increases are what we're going to be seeing.
Okay.
And we're not going to be, I don't think we're going to see that, 8 times a year. I think we're going to see it maybe 2-3 times a year at most.
Okay.
So if you factor that in, and what I do with my clients is I actually will factor that into sort of like a cost benefit analysis between a fixed and a variable rate, given an X amount of changes to the interest rates at 0.25%, what makes more sense?
Mm-hmm.
And most of the time, at least, variable is still the cheaper option.
Awesome. So that's good. I mean, and that's why there's so much information on the internet, and it's hard to know what's true and what's fake news. Yeah. So it's so important, and I'll say this every single day, that you talk to somebody who is a professional and who is a specialist in that area. Exactly. So I will forever be asking questions to you and the other agents that I work with, because there's just so much information and you can't specialize in it all. So, we help each other, and it's very, very good. Yeah. So
sounds good.
Yeah. Okay. Well, is that everything, Lewis? Is there anything else you can think of?
I think that's it for interest rates. I think in terms of, a lot of people asking the expert of what they think about it. I think that's what my opinion is on it. Maybe, as far as we love to look into our crystal ball and be able to predict it, we're not always right, but at least we can sort of give an idea as to, based on what we see, what might happen, right? So that's what I think.
Same with the housing market, right? Everyone's like, what's it doing? What's it going to do? And
we've been wrong quite a bit the last 2 years. Let's put it that way.
Yeah, exactly. So, it is what it is. I mean, I like to ask people, like, if this was your house, what would you do? And a lot of times when I'm helping people sell their house, I say that, like, I'm doing for you what I would do for myself. If this is my home, this is what I would do. And then sometimes, that helps people a little bit, because you can give them all the information and they still kind of look at you like, okay, so now what? Mm-hmm. So sometimes I just say, personally, this is what I do. It's totally up to you. This is why I do it. And, sometimes that will help people. If they say, my mortgage, I don't know if you care to know, but I'm, fixed, or I'm in a variable, and that's what I prefer. And this is what I would do if this happened. So, I mean, you follow the pros and do what they're doing. Yeah. Always. So anyways, thank you so much for joining us today. That's all that we have. We will bring you some more hot topics in the coming weeks. Have a great day. Bye.
See you guys later.